Hey, it's Mack with PriceActionTradingSystem.com, and it's Wednesday. It's October the 9th. This will be our chart lesson for today. And I've got this on here to start with because you might have seen the bigger channel. You can kind of see a bigger channel there. You notice we overshot it, and we kind of overshot it an equal distance on the high side. We came down, we overshot it again, and then we rallied out of there. But this was really a classic kind of price action day. I'm going to move this bigger channel. I wanted to show that in case you were looking at that. Maybe you saw that. It's there, but I think it was much easier if you remove these lines and you're only looking at the shorter term channels that I drew here. Notice you got a nice channel working down right here. Notice how it's holding prices neatly right here across those highs. And if you drag it down, originally I kind of had it here, but you can see it kind of moves over, and later I moved it over to there. It didn't really matter where it bounces as much other than your exits. It's this line that you're really interested in. Then we get a break. We take a couple legs down. We try to get a new low. We don't quite get it, but it's close enough. And then you get a two-legged correction in there, kind of a two-legged correction, and then you get another leg down. And this is classic price action. You got two. Notice this leg here. You got two measured legs on a bigger picture, and this is just two legs on a bigger picture. One leg correction, second leg. If you went to a bigger, and you can see that's almost a perfect measured move there. And then looking at it, you can really see this is really one leg of correction right here, and then you get two legs in the middle. And even though there's multiple swings in there, it's really one leg on a bigger picture, and then you get two legs of correction, and then you get another pretty much measured move. It overshot it a little bit, and then it sells off again. And I mean, this is classic price action, but you have to learn to be able to see this stuff. And then you get another measured leg like this one. So once this started making this channel here, and you can see it was holding prices really well, you get a break, and then guess what? It gets two measured legs down. I'm pretty sure these were equal measured legs if I remember right. And you can see there, I think it looks like maybe it missed it by a tick. But there's leg one, there's leg two, and then we corrected and started going out of there. But I want to say this because I went back and forth with a couple of emails from one gentleman. Just because you get this break right here and two legs down, it doesn't mean you start buying right here. Of course, it would have worked today, but really what you got to do is you got to get a confirmed trend line in the other direction, and then you look to buy. And if you're coming to the highs, you don't sell just because you got your break and a couple legs up. You wait till you get a confirmed kind of trend line in the other direction. You can see that right off those first couple of swings, but you could have had it right off these lows, and then you just copy it and drag it up, and then look how many times we bounced off that line right there. One time, two times, three times, and then the fourth time. And you might have even been tempted here, but I think it was getting a little bit, there's a lot of overlap right there. That's not a perfect bar. This one didn't really break below. I think it still would have worked, but I just think it was really risky going short that way down there. 45.50, and yeah, it would have still worked. I don't like that setup because there's a lot of overlap, and that's another thing too. Just because you get a turn down off a line, somebody actually sent me an email saying they had let me try to explain this again. I've explained this a few times. When you get it like a pullback to the EMA, you want to see rejection of prices. Notice that this line closed near the high. This one went down, but it came back and closed up at there. You didn't really get rejection until this bar. So when this bar closed, then you could have gotten in the trade and gone lower. You want to see rejection, and if you're coming up, you want to see a big bullish bar. You don't want to see a bar like this one. Notice this bar right here in the middle. It looked like it was going to be rejection because it opened, it traded down, then it closed and traded way up here. But by the time it closes back down, that's just a 1 bar trading range. And look at that. That's just a trading range. And what normally happens when prices break out? Look what happened. It snapped back. And then they break out the low side. They snap back. So you got to be careful of trading in those trading ranges. And there's little tight ones, just like right here. Look what happened. It broke out the top first, and it snapped back. But then it's not able to come back in because the momentum is down. It's a downtrend. So you got to be careful. But look right here. Here's a good example. That's a two-legged pullback to the EMA. And look, it looked like it was going to reject prices, but then it closes up here and it keeps going out. You got to wait for rejection or a nice bar. And somebody said, well, all tick charts aren't alike, so it could have been, you could have had a bearish bar there on another chart. Well, that doesn't matter. If you don't see it on your chart, don't trade it. That's the way I'll leave that. And, you can't assume that because it looks like this on your bar that somebody else gets a big bar down like this right here. You can't assume that. So, don't try doing that. That's gambling. You're taking chances that you don't need to take. So, I hope that makes sense to people. I don't want to get off in the weeds here and confuse more people than I help. But you gotta look at the whole picture. And we're not pattern traders. I'm trying to remind people we're not pattern traders. We are, we're looking for certain patterns, but we're looking for them to occur at certain areas. And, it's when they start getting in this, look how we started getting all this overlap here. And this, again, is just a trading range. And look what happened when prices broke out the top. That's where you want to go short, and it snaps back. And it didn't really, you had all these matching highs across here. You can see that. And then you get all these kind of matching lows across here. And so it doesn't look exactly like a trading range yet, but when it stops, it finds resistance here and then breaks out and turns straight down, especially when you're looking for it to come back down anyway, because that's the first break of this channel. That's a good enough reason. Generally, you may want to wait on a second entry, but this is a second entry counting with the lows. Notice this first entry. Here's your new low, pull back, first entry, pull back, second entry. And that's why I like that trade. Plus, it's a failed breakout. It's with the trend. This is the ones you got to be careful of buying down here because the trend, the bias is downwards. And so we traded down into this range. And then notice right here, we just get a smaller version. It breaks out the low side, it fails. It breaks back out the high side, it fails, and then it turns down. It starts trending down again. So be careful entering out of this stuff. You want to see a bar like this. This is the kind of bar you like to see. Now, if it's in the channel and it's going up and down and it's time to turn down, sometimes if you don't take a first entry, you won't get another trade. Notice on this one, here's your signal bar actually that broke here, but that's not a good signal bar. You can't go short there. When this one ended up closing, again, you got a lot of stem, but it's got some red body and it's still off your line. So if it breaks below that one, but I would use a limit order in here and try to get back up in here a little bit so you got enough room to get out before here. It wouldn't have mattered, but sometimes it will matter. Here's one that, see how this one bounced back, but prices didn't come back lower again. It kept going higher. So you don't want to, you don't want to enter there. You can't enter there really. So I hope that makes sense to people. And I think a lot of people already understand that, but sometimes people get confused and they think just because they see a two-legged pullback, that's right at the trend line, especially you don't want to be buying this. You could have bought a lot of these and made money, but look what would have happened if you bought here. It would have failed on you, and it goes lower and you get a loser. And sometimes it'll go lower and keep going like that right there. Here's a good example. What if you'd have bought right here? You'd have never gotten out probably, and then it ends up going 5 or 6 points lower and you get burned. So don't counter trend trade. Only stay with the trend. And then if it goes into a range right here, you got to switch to the range rules. You could theoretically buy down here on the range rules, but remember, because the bias is down, you're better off to only sell. And so you could have sold this one and you might have considered selling this one, but when it went to all that overlap, I would have exited. Plus, you've had your trend line break here and 2 legs down. It didn't quite make a new low, but that might have been a good enough reason to keep me out of that trade right there. But, that's one that could just fail right there. But I wouldn't have. The only reason I didn't like that one was because of the trend line break and the fact that we tried to go lower twice and couldn't. And there's a good chance you're going to reverse out of there at the end. And it did. It didn't go very far, but then it turns down again. And if you had the bigger channel on there, you would have known that there was possibility of prices finding resistance over here. So even if you didn't have it, if you drew this line right here off these first 2 swings and drug it up, and you could have actually had it off these first 2. You don't know. That one's a little harder to find, but this is obvious right here. Draw it off these 2, drag it up, and then you see we get resistance there. It actually overshoots it, comes back inside, can't get out, and then it turns down, and then you get a second entry short there. Boom, and off it goes again. And, the bias is still down over here. So, but let's talk about each trade. And this is a good example of what a reversal looks like. This was a trading range, and let me move my line up here. You can see that there's highs right there and there's lows right there. And it broke out the high side, fails, and it turns down. But wait on the second entry. You could have taken that first entry and it would have worked, but generally you want to wait on the second entry. Of course, this is early in the morning, so most people probably weren't trading, but if you'd waited on the second entry here, even if you had taken this first entry, as long as you kept your stop up here, you were still okay. But it's usually best to wait on second entry because this could have gone higher just as easy as it turned down. But it's a trading range, and this is generally what happens. So it fails out the top, it pulls back, it tests it again, it can't break a higher again, and it turns down. There's a second entry. You could have thought about going short there. Then guess what? It comes down, and it breaks out the low, and it snaps back. And you get a first entry, pull back. Actually, you get a new low, first entry, pull back, and there's a secondary. That's like a little breakout pullback, second entry short, but it's right off the trend line. And, so great place. It's a long trap. People still looking to possibly get long. It's a nice bullish bar there. But if you draw on this trend line and you realize this is a trading range, you might have been leery about going long right there. You could have actually gotten trapped into that long. If you did, just reverse here if or just exit right here. And you don't lose but a tick or two. And so that's a nice short right there based on the way prices come out of a trading range. And this was right at the open, right around the open. Where did I have this? I had it down here to show this little breakout area right across here. And then you come back and you test it. I drew this one in green. It's it's a breakout pullback short. You got a nice little reversal bar. You just come off the low side. I didn't really think that was the low at that point. That was another reason I kind of like that one because I was thinking we had a lot more room here. But when we bounced there a couple of times, I drug this line up, and now I'm thinking, oh, maybe it's more right there than it is over here. And that did tend to hold the rest of the way down. So, and then it comes back, and this is, now you got a double top here. You've tested this breakout area twice. Closes are getting lower. The highs are getting lower, and you get this, but there's not a good setup here. This is a first entry, so you don't want to be going. That's a one bar trading range, and a break below that's usually going to snap back. So it breaks below, it snaps back, and then it turns down. So that's more your entry. Even though this is still your signal bar, you want to wait on more confirmation that we're going lower, and then boom, it takes on down there. So this is one I would have waited on the break below probably this bar or even this bar, and then use the limit order, and you see it. You got a chance to probably get in right there. And then you come back and you got a little two-legged pull back. Can't even quite get back to the MA. Look at that big reversal bar. That's what you want to see. And look, it broke out the high side first and then turned down. So you really could have had your stop right there. You would have had to wait on this to pull back a little bit, but then it just zooms on down. And then there's no setup after that unless you want to just try to guess here. And then it shoots on up. But this is going back to here. I forgot to talk about this. What a reversal pattern. You got a failed breakout, and then look how much lower this low is than these previous lows. And then your high is lower, and then it comes down, and then you get another lower high. That's another reason I like that setup right there. And then another lower high, and then another lower high. It's making lower lows and lower highs, so now it's trending downward. So you're looking for shorts. And we talked about this one. It's a little two-legged pullback, big reversal bar, and then you come back, and now you got these matching highs. You kind of break above. It's a second entry. So this is just your first break of your trend line. It's a second entry. I like that one. Easy scalp, back down to the little double bottom again, and it finds resistance or support right there. Comes back, it finds resistance here. You might have thought about going short. Look how flat the EMA. Look at all the dojis and the overlapping bars. I think it's getting real iffy here to enter right in this, so didn't mark anything. Same thing here. I thought it was too iffy that it could go higher or lower there. There's just no sense of direction. And if you were looking at this measured move, you might have already been thinking, hey, we may have a measured move in here. And you can see that we just about got it. We went we couldn't close. Well, we might have closed a tick higher than that, but we went a couple of ticks higher, and then it's selling off. And notice how when it broke below this is what I would wait on the short here, a break of this little channel and a retest. And you got a break and a retest. And notice the retest is kind of right inside, right across those highs, right across there. From earlier, you can see that right across there. Let me just draw the line on out. And retest of that, a retest of the lower trend line, and then boom, off it goes. Failed second entry short or long right here. Got a new high, first entry pullback, second entry. Traps everybody. Look at that reversal bar right off that little trend line. Boom, there it goes. And you could have taken your runners all the way down to, I think it came back and got these runners on this move right here. But that's your first break. And look at that bearish bar right off the EMA. That's what you want to see, rejection. Notice it didn't reject off these two bars. It took a minute. Then you get your rejection. Boom. And then that's your first leg, and then a little pullback. And look at that reversal bar again. Another nice reversal bar. And boom, this one took a little bit. This one was kind of make you nervous. This one you may shake you out because it's getting down here low, kind of like here. You know, it's you know, you got your break and a couple of legs down, but you probably should have been thinking, hey, once it kept working lower, hey, we're probably going to get a measured move. And you see it didn't quite get it. It missed it by maybe a tick, but that's close. You know, close. That's real close. And when you started getting these bars right here, I definitely would have exited. What I will do a lot of times is I'll wait on the first break of, you know, notice I didn't break above any of these bars on the way down till right here. That's where I would have started moving my stop above each bar, locking in, and then when it finally breaks higher, you would have got out as close to the low as you could before it went higher. And you know, anything after that, you would have lost. You know, you would have given your money back. So that's how I like to exit that sometimes if I'm not sure and it's looking a little shaky. Just tighten your stop above each bar as it closes, and use the last closed bar one tick above it to stop, you know, to take you out and to take your profits or whatever. So, and then you get your reversal. Notice how this line, I drew it right off those closes down up through there. You could have used these first two swings right here. It fits both ways. It might have been a little harder to find though. And you might have even had it right here, but when it bounced right there, it's a second. Look at that reversal bar. That's rejection off the EMA. It didn't reject off those first couple of bars, but it did right there. And really what I think it was just coming off those closes right there. Touched finally. And boom. You had to be quick on this one or you missed it probably. And off it goes. And then you get another bounce off that line right there. It got just enough for a scalp, and then it backs up. And then the only reason I like this one is because it broke lower first and then closed. Look how it rejected prices and closed on its high right there. Just enough for a scalp. And then this one was a little bit shaky. Again, you got a trading range right here. This is just another trading range, so you can consider your range rules. Now we traded back up into this little range, and notice it tried to go, it broke lower once, it snaps back, it breaks lower again, and it probably trapped everybody. Look at that bar. You don't want to be going short below a bar like that. That's not rejection. And it looked like it was going to be rejection here, but look what happens. And that's why you got to wait till the bar closes. And so this was a little more aggressive, but that's a great long right there. You don't know that it's going to do this, but you figure it's going to come back to the top of this trading range right there. And you see that it found resistance there, but notice how it keeps working higher. You can tell how it's closing higher and higher, and then finally it gets through and it hits all the stops from the people that loaded up on shorts here, and all the most of the shorts got stopped out here. So then most of the longs got stopped out here, and some new shorts got stopped out, and all their stops are here, and then boom, it breaks through, and shoo, that's a perfect sign of a trap. News will look like that too. But you know you got a good strong trap when you see that. And so that pretty much concludes the day, but I hope that me clarifying, let me just go back, let me break out of here again a little further so I can show you this. But you want to see rejection, like I said to the one guy that he had a setup about like this, and this bar looked about like that, and he goes short under it, and then it snaps back and goes higher, and he wonders why. And, he says, oh, it had a nice setup there, except he may have had a second entry. Well, that's not a nice setup. And you can't assume that just because it looks like that on your bar, that on another chart, you got closed on its low and there's a good bar there. You go with what you see on your chart, because, you might have had one that closed on its low here, and I don't. But that still doesn't mean that, just because all tick charts are not alike doesn't mean you can assume that it might look different on another chart. I hope that makes sense to you. It may not to the people that weren't questioning me on that. But what you want to see is, you want to see rejection of prices off that EMA. And I say that's what, look how it broke to the EMA, and look at that. It rejected prices and closes way down. That's the kind of setup you want to see. And look at this one coming back here to the EMA. This is not a very good one because we're not above. That looks like rejection right there. That is rejection, but guess what? It's just a failed break out of that trading range, and so it just snaps back, and then it fails out the top and snaps back again. And, but the trend, the bias is still down at this point. And hopefully you can see that that's why you don't want to enter in all that stuff, because this is what happens. And hopefully you can see that little range right there. Let's just put the lines on it and show people. You can see that little trading range right there. And it fails out the low side, fails out the high side, comes back and tests the low side. That's what you want to see. Gives you a chance to get out if you got trapped in there somehow or something. If you went long right in here, it came back and gave you a chance to get out. And but it also comes back and gives a second chance for people that didn't, it's too dangerous to get in here, because it could break a tick or two like it did right here and then turn straight up. And so you wait for it to come back and then turn down. And that's what we call a breakout pullback short. And there's not a real good setup here until this bar right here. And so you may have wanted to wait on this bar right here. And that's what I'm trying to explain to you. This is not even though this is not a real good setup here, but I drew it green anyway because I was looking. We had the break of the channel and we had a retest of it, and we had a breakout pullback short. There were a couple of different reasons, and even though this is a doji, it does have a red body, and then this one kind of worked lower and came back and tested it again, and then we turned back down. So this is probably where you'd want to try to go short right in here. Aggressive trader would go short right below that doji, but you got to be ready in case it takes another leg up. But notice again how this came way below the EMA and then comes back to it. Look what happened here. Look how bears set. Now you know the bears are active, because look, before they couldn't, they could barely take it down. Now they take it way down and it goes below these lows and it goes below the EMA and it comes back and it can't close above the EMA. That's different. Um, and that's what we're talking about. Look at this one. It's this one's on both sides of the EMA, and look how flat it is. That's a good sign that it's a bigger trading range. And hope that makes sense. So, and then this one, that's just a little trading range coming across there, and then it breaks lower. That's why I didn't like entering short right there, because of that trading range. It's probably going to break out and snap back, and it breaks out and snaps back, and then it comes back and breaks out the top and snaps back. And you wait on a good setup bar. Neither one of those were good enough, even though that's really your signal bar. Break below that, but wait on a better setup like right here, and boom, then you get a chance to go short. So we're about 30 minutes in. I think that should cover it. I'm going to wrap it up. I'm still a little behind on the emails. I apologize, but I'm slowly catching up. Hopefully I'll be back to normal here by the end of the week. So, but this is Mack with PriceActionTradingSystem.com. I'm going to wrap it up, and we'll see you next time.